When it comes to property investing, are you building wealth by design or just hoping for the best? I'm Tim Graham and the Property Playbook starts now. Successful investors don't leave their financial future to chance. They follow a structured, strategic plan to grow their wealth and maximise their returns. Today, I'm joined by Michael Mancuso of Greenrock Advisory, the firm that has helped over 1,500 investors take control of their financial future through tailored strategic property investment plans. Michael, thanks for joining me today.
Tim, thanks for having me. Good to be here.
Good man.
Yeah.
Well, why don't we start? Tell us a bit about Greenrock Advisory.
Yeah, well, it feels like a long journey, but it's been 10 years now. Well, 9 years this year, it'll be 10 next year. And it's been quite an evolution. You know, we started back in 2016 really with a passionate my background was in commerce and more the financial planning aspect. My business partner was in property, so we merged the two together, but essentially we were a property advocacy group, and we've evolved over the years to a bit more of a holistic approach when it comes to property investment and giving advice.
Sure. So obviously business would have changed a lot over that time. What about customers? What have you seen over the last decade?
A huge shift. I remember, people were very closed-minded. I mean, it was just about property investment, and our structure was, let's buy an investment property to pay off debt or minimise our tax, and working with accountants and planners, and it's about growing wealth. But now there's a lot more emotion to it. The cost of living's impacting people, and our younger audience, over 9 years of, people that were once 15 and now 25, and people that were 25 and now 35 are looking at different strategies to help them get ahead.
Yeah, right. So look, we said that you've been helping over 1,500 people sort of grow their wealth through property. I'm interested to know, when they're first starting out, what are some of the biggest obstacles most people have coming into the market?
Yeah, it is multiple ways to answer that question, but for me, I think it's education and advice. So, it's not just about the property or tax or how do I structure this. I think it's what's your end game. So I think people don't actually know why they're doing it. They just think it's a good thing to do. Yeah. So we like to put a halt on people and say, right, let's discover what our end game is. And we don't know what an end game is for 10, 20 years, but at least 5 years, and let's work backwards from that. Off that, is it about minimising your tax? Is it about debt reduction, creating wealth, or everything, a legacy for your kids? And we try and bring in the absolute experts to help build this out.
No, very good. Because as we say, it's either you're building a property investment by default or by design. So by designing it, you can obviously put in place some strategic planning.
Correct. Yeah, so that design piece is really important for us. And we try and position ourselves in the market with exactly who we are, and that is it's a real holistic approach to wealth creation. And when I say wealth creation through property. Yeah. And we've diversified our business into multiple different dimensions from the financial services aspect and the property aspect, not just having one option for people.
Okay. So when you say holistic, what does that mean? If there's a customer coming into your business today, what could I expect?
First of all, it's about building trust and getting to know your needs. Now, we might think that your needs need to be shifted a little bit, so it's about being honest and giving back feedback, because to create wealth is hard. There might need to be sacrifices that might need to be made, and so on and so forth, and a lot of education. So we go on what we call a process of discovery initially, and then as we unveil the best route to get to a successful point, we start introducing the right people.
Okay, so property investment's at the core of it. What are the services are sort of surrounding that in the holistic approach? Yeah,
so we partner with financial planners and a finance company, and they're absolutely brilliant, and we want that to be independent advice. They might say, Michael, this person's not suitable or for Greenrock, and that's fine. We are property centric, so we have the property piece, but we also have an accounting company. So what we recognised early on is, without throwing any shade to accountants, that people weren't that happy with their accountants, or they inherited an accountant. So we started Greenrock Accounting Proprietary Limited, and that's been really successful in giving people structural advice. Like, there's multiple ways you can buy an asset. Yeah. But when you exit an asset, there's tax, and you've got to pay things back. And so the accounting piece was massive for us, and that's really helped us give people tax advice, because that's big.
Yeah, it's good. As you say, it's an expensive exercise if you get the entity wrong in the long run.
Correct. And I think that gives us a competitive advantage, because it's property, it's tax, and then we can introduce you to these brilliant financial planners or people in finance.
Okay. It's interesting with the topic of accountants. So many people rely on accountants for financial advice, but they tend to specialise in income tax, not necessarily investment advice. So it's interesting you sort of tie it together with the financial planning and obviously being property centric, using the real estate to grow the wealth.
Yeah, well, I mean, I've done a bit of study and worked through the process and just the way that, you know, the Australian regulations are set up when it comes to financial advice. Like, you know, accountants can't really give investment advice, they can give you tax advice. Financial planners are sort of pigeonholed to superannuation, and essentially Greenrock's in real estate. So there's things we can and can't say about, you know, finance, credit, financial planning. So it's hard to have these conversations because people want to know everything. And we're limited to what we are legally bound to say. And we've always paid a lot of caution to the compliance and the risk aspect of a customer that's entering in our business, which has been great because with the 1,500 clients, there's never been a bad review or Google review. However, a lot of people haven't been able to get through the next step because we just think it's not the right time.
Yeah. Okay, so we've sort of looked over the sort of last 10 years and how things have evolved. I'm interested to know in more recent times, higher interest rates, lending policy changes. What have you seen over the last couple of years in real estate? Because post-COVID, you could throw a dart at the dartboard for those 4 years and you'd probably make money anywhere you landed. But in more recent years, last 2 years, we've seen higher interest rate environment. Where have you been having some success in real estate?
I'll start by the challenges. So consumer sentiment is hard after what everyone's endured the last 4 years. Interest rates went up 14 times since around November 2022. I don't think many people saw that.
No.
We factored in some changes, but we won't get into that. Construction costs have been putting a lot of pressure on people. And then markets have still risen too. So people can afford less. Their sentiment is not as strong as it was. So. And it's much more challenging, as you just mentioned, to find like where's that next area. I think you know partner, and again our property acquisitions team are experts in this field, but data is big. So you know, and I think that the brilliant part about what we do is we can move around. So if Victoria is looking good for the next 18 months, which we think it is, we'll focus in Victoria. But we've been in Perth, been in Southeast Queensland, and South Australia, so we're able to be, you know, diverse
and nimble.
Yeah.
Okay. So one of the things I know Greenrock pride themselves on is creating intergenerational wealth. Tell me, how does that work with you? If I'm coming to see your business, it's a plan for kids and beyond.
Yeah, it's long term, right? That doesn't mean that you're going to hold the property or the asset for long term, but the strategy is long term. People think, I need to hold a property for 25 years. Well, we don't. We do a lot of substituting and changing and transactional over the years. But it's really about that end game. You know, for some people, you know, helping their kids get in the property market's important. Helping them, you know, get money for school fees is important. That's why they do these investment structures. However, for some people, it's not important at all. They go, oh, back in my day, my parents didn't help me out. They'll figure it out. But for the people that it is important, there's multiple strategies with our financial planners and accountants that we work with to help find ways to help their children get in earlier, because I think the average first home buyer is now 37 or 38 in Vic, and that's not what it used to be.
No, not at all. So something we touched on at the start of our conversation was about you know, building by design.
Yeah.
A lot of times you come across investors who may have been able to accumulate 2 or 3 properties, but it was just because they had the borrowing capacity to be able to do it, but it hasn't necessarily been successful. I'm interested to know if somebody comes to you today and maybe they've got 2 or 3 properties, they're not necessarily performing that well. Are you a believer that you always hold real estate, or sometimes you need to move something that's not performing on?
No, you've got to face the facts and the truth of performance. And even personally, I've bought property that has done all right. I've never faced a loss, but I would rather my money be somewhere else. So I think we just need to be real with what we have on our balance sheet from an assets perspective and the liabilities, and go, right, this one should go, or this one's going to be good in a couple of years. But yeah, definitely if we got some things there that are just a bit off, I think they should go. Yeah. If we can exit.
Because it becomes a bit of an opportunity cost too. If you've got debt tied to an asset that could be into another market that's performing better, you've got to weigh that up, don't you?
Totally. Yeah. I mean, if you're borrowing money and negative gearing is a nice thing to have, but at the end of the day, you're losing money, right? Yeah. So we want to be making money. We want to be getting capital appreciation. So we want to be really strategic about what we have, and markets are shifting and moving so fast. So aligning yourself with a company that it's their core role and being in the community, you're going to see these new markets and opportunities arise, and you want to be able to pounce on them if you have the capabilities.
So what's the ongoing work with your office after I've purchased a property? Are you catching up with them regularly? What happens after the purchase, the after sale service?
Yeah, well, it's a bit of a little journey to get to that point, but that's when we say the journey starts. So you become part of Greenrock in our community. From the time you might have bought an established property or something off the plan or whatever it was, that's when the journey starts. And it's 7 days a week we're here for our clients. We do 6 monthly reviews, formal reviews, financial planner, accountant, we're all there. We give you, a performance measurement on how your entire assets are performing, and then we will make decisions of what we do from there. Because there's systematic risk out there like COVID and all these big things that can happen, and the strategy might change. So it's uncomfortable for some people doing these things all the time. It can be a bit of a chore, but they're very happy over that 3 to 4 year period when they start seeing results.
Yeah, of course. Okay, well look, finally, if for any of our viewers out there that are just thinking about getting into property investment for the first time, what would you say would be the top tips to get into the market?
There's so many, but I'll start with some basic ones. First of all, do research on who can help you. You don't need to go paying them money or working with them. For example, you don't need to come to Greenrock but absorb the information, be a sponge. So get educated. Then number 2, don't get caught up in the weeds. Just take action. Get involved, get it going. Might not do as well as expected, but that taking action piece is the key to success.
Well, you can't benefit from anything that you haven't taken action on, can you?
No, that's the biggest risk. Doing nothing to me is your biggest risk.
Exactly right. Well, Michael, I've really enjoyed the conversation. Thank you very much for coming. That's the play for today, folks. This program has been brought to you by Hotspotting. This is Ticker. We'll see you after the break.
You're watching Ticker. We'll have more in just a few minutes.